So I'd like to deal with this PPP loan in detail. I'm Justin Goodbread, certified financial planner, certified value growth advisor, and certified exit planning advisor. You can find out a little bit about our firm at financiallysimple.com. We have so much information on there. I'm going to cover the PPP funding for those individuals who have received the money. Got lots of questions online about, hey, Justin, I now have the funding. What in the world should I do with it? So we're going to cover that in detail. Now, look, this is for educational purposes only. I'm going to tell you to speak to your advisors, talk to your CFP, CPA, attorney, banker, etc., as we go through this information. So first of all, we're going to deal with the PPP loan. The PPP loan refers to the Payroll Protection Act, Payroll Protection Plans, what they call it, program, I'm sorry. And whenever you receive the money, from the date you receive the money, you have 8 weeks. An 8-week countdown takes place and forgiveness starts to happen. So people say, well, Justin, when do I actually start forgiveness? The day you receive the money starts when the funds are dispersed from your bank into your bank account. That starts today. And you have 8 weeks to try to spend that money in a manner that it can be forgiven. Now, this is all found in section 1106 of the CARES bill. That's right. I'm a dork who reads the law. So you can actually find all this information in section 1106. So let's kind of dive into what's it going to take to have the money forgiven. If we understand what it takes to have the money forgiven, then we know how to plan accordingly as us as business owners. So let's look first at your payroll costs. Whenever we calculated our payroll for the bank, we were able to take our W-3s, our 1099s. No, I'm sorry. 1099 if you're Schedule C. We actually changed the rules on that, but we were able to calculate our W-3s, our payroll statements, et cetera, and come up with a calculation that they on the front page of that particular form. And included in that was our insurance for group insurance and our retirement benefits. So payroll cost is going to be the main driver of the forgiveness. So what we're going to spend the money on over the next 8 weeks, 75% of that loan amount must be spent for payroll. And that includes our compensation we pay the team, insurance, that's group insurance, and retirement benefits or group retirement benefits. Now there's a question, and I got to tell you, this is one of those little caveats that I hope we get some clarity on. There's a maximum that the people who earn more than $100,000 a year can make. If I calculate it on an 8 weeks basis, in other words, if I take 52 weeks in a year and divide it by $100,000, that means over the next 8 weeks that the business owner, let's say, or those individuals who make more than $100,000 cannot make more than $15,385. Or are we calculating it based on the effect of 100,000 divided by 12, which is 8333, which would be $16,666. I have a feeling they're going to go on an 8-week slot. So I'm going to tell you, put in your mind's eye the fact that you, the business owner, if you're used to making greater than $100,000, you're not going to be able to pay yourself a wage greater than $15,385 over the next 8 weeks. Now, that doesn't include insurance and retirement for LLCs, S corporations, C corporation. There's a little caveat there we're going to talk about in a little while about Schedule C. There's some little caveats there. And I think the SBA's guidance to Schedule C is, or LLC, single member LLCs is not as luxurious as it could be for those individuals who file 1065s, et cetera. So whenever we get the money, 75% of the loan must be used for payroll. That is the key right there. Now we're going to talk about what ifs in just a second. That's the key though, putting that in your mind's eye. So if you got $100,000 in a loan value, 75,000 of it needs to go to payroll. Where's that coming from? Well, here's the actual rule. I highlighted it for you directly from the law. If you'll notice there, point number 1 says payroll cost. That's the exact calculation that we use when we filled out the information with the bank. So go back to how you calculated it. It would have been your payroll, your own compensation as a business owner, your employee's compensation, your employee benefits, both including health care and retirement benefits. So payroll costs. And then we go into a couple of other points I want to cover here in detail. So let's kind of just get out of this law section. Let me give you into some other points of forgiveness. The first one I want to deal with is interest on a mortgage or real, here's the actual verbiage, a mortgage or real or personal property in existence before February 15th, 2020. So I have a lot of clients who own their own building. If that's you, then we're looking at an amortization table to figure out the interest amount for the next 8 weeks, the day that you receive the money, the interest for the next 8 weeks. So an amortization table can tell us that. The other thing we can use the money for is utilities, gas, water, transportation, telephones, internets. One of the things that you may consider is seeing if there is some points that you can pay off. One of the things that somebody asked me, which is a lot of interesting question, is, "Hey Justin, we pay our cell phone through our company, and we have our phone on a loan program. Could we go ahead and pay our phones off during this 8 weeks period?" We're going to talk about that in a little bit and kind of deal with some of this pre-funding ideas. You can also pay, if you don't own your building, you can also pay your rent obligation. Oops, sorry, too fast. You can also pay your rent obligation. So for those of us who maybe rent our building, we can pay our rent obligation. Now, here's where it gets interesting. There's a lot of industries, including the dental industry, which I know a lot of you who watch this are dentists, that are expecting maybe an extension or some continuation on this particular 8 weeks. The ADA is lobbying for that particular move. I don't think it's going to happen. I'm just being candid. I don't think it's going to happen. So at this point, there's no guidance for an extension of the forgiveness timeframe. So I would think I would put in my mind's eye the day you got that money, whatever the day that is, figure 8 calendar weeks from that date going forward. And that's when we want to spend the money on payroll, on interest, on utilities, or on rent. So we want to kind of put that in our mind's eye. Well, what can we do then to reduce? Are there ways that can reduce our forgiveness amounts? Absolutely. And here's some technical language here that I wanted to cover. There's 3 points here I want to kind of go over with you. A reduction of forgiveness will be proportionally reduced, is what it should say there, by any reduction in the number of full-time equivalents, or FTEs as they call them, during an 8-week covered period. So let's say, for example, for kicks and giggles, you had 10 employees in the first part of this year. And now you are going to only hire 9 employees during this next 8 weeks. That's a 10% reduction in forgiveness. That's what they're referring to. If you do not keep the same FTEs, full-time employees, in place over the next 8 weeks as you did last year, or depending on if you're seasonal or not, early this year, then there'll be a proportionate reduction in that particular category there, that particular forgiveness amount. Also, if you have employees that earn less than 100,000 in 19, you can't reduce their pay greater than 25%. So let's say that somebody was making, I'm going to do this in my head, $50,000 last year. If you were to reduce their compensation over the next 8 weeks by greater than 25%, there's also a dollar reduction in the forgiveness amount. What are they saying? They want you to pay your team about what you were paying them before all this happened. That's what they're telling us here. So a little bit of common sense here will say that they want us to hire people back. So let's hire the team players back at the right time. We're going to talk about it in a second. And then let's pay them a reasonable salary, okay? We don't want to just hire them back and then give them peanuts so that we can pocket a lot of the forgiveness. They're not going to allow you to do that. They want to make sure that you're paying the team members pretty close to what you were paying beforehand. Now, there's an exception inside here. There's an exception, and that is for the rehires. We talked about this in a couple of videos ago. For those of you who perhaps have put your employees in a furlough position or laid them off, there's a exemption there. If you can hire them back and have their same level of payment restored before June 20th, then there's not a forgiveness amount reduction there, so to speak. So that's one of those little caveats that's in the bill. So guys, I'm taking very complex points of a law and trying to simplify it as much as possible, because I get it. Not everybody's a nerdy CFP who wants to read the law. Now, I do have a couple of clients who are about as nerdy as me, and they've been trying to keep me apprised, and they know who I'm talking about. They're watching this right now, and they're probably saying, "Yep, that's me." All right, let's continue. So there's some unclear areas. Let's be candid about this. We don't know at this point what the SBA is going to do. Are they talking about the full-time employees? Are they saying this based on 30 hours or 40 hours? A lot of people think that the SBA is going to use the Affordable Care Act, as we call it, the ACA definition, which means a full-time employee is based on 30 hours per week. Okay. So for those of you who are paying an hourly rate, one of the things you may consider is making sure that you're paying to that 30 hours per week scenario. So they're classified as FTEs or full-time employees. Those of you who are on a salary position is a little slightly different. So salaries not quite the same. So there's a little unclear area there. That's the second one. The first one, if you remember, is how are they going to allow us as the business owner or those individuals who make greater than 100,000? Are they going to take 100,000 divided by 52, or sorry, 52 weeks divided by 8 gives us our factor, which is roughly $15,000 that we can pay ourselves during this time period out of the forgiveness loans, or they're going to allow us to pay ourselves 16, which would be 100,000 divided by 12, which multiplied by 2, which would be $16,666. That's the second unclear point right now in this whole forgiveness position. I'm sure the SBA is going to provide guidance as they had in the actual acquisition of the loan. You remember even as late as last week, I think it was Thursday or Saturday of last week, they're still offering guidance to banks on how to actually position the loan, even after now the lending has been completely funded in this first round of funding until Congress actually passes the next portion of this that they're kind of dickering back and forth across about. So let me give you some planning thoughts. Here's some points that I want you to consider. Whenever you get funded, oftentimes a lot of banks, not all, but a lot of banks at this point are depositing the PPP money into a separate account just for this money. And what they're doing is they're drawing expenses out of this account. So here's kind of how that works out. Let's say that you're going to pay rent. That's an easy one for us to do. And let's say that you're going to pay rent on the 1st. That's when your funding happens. So you'll pay rent out of your operating account, and then you'll move $1,000 if that's your rent number, whatever the number is, from the PPP amount account over to rent. A lot of the banks aren't issuing checks fast enough on this particular account. So that's one idea you can do. The second thing you can do to help kind of keep track of all this money is just set up a separate code in your general accounting system. I mean, you could say it's PPP payroll, PPP rent, and you could just set up a separate little code inside your QuickBooks or inside whatever accounting software that your accounting firm is doing. And that just allows you to track the dollars a little bit more easy. So when we have to go to report to the bank in about 90 days, they can see where your money was spent. Staff up. You want to staff up during this 8-week period to maximize your loan forgiveness. So if you wrote that you had 10 full-time employees last year, you want to at least make sure you have 10 full-time employees during this time period. But remember, you can pay people that even aren't working. I know a lot of dentists right now. The reason why I bring dentists up is because, number one, we work with a ton of dentists. I love working with dentists. I mean, these are some of the sharpest minds I have the honor to serve. But even some of the contractors, I was thinking of a blind company that we have the honor to work with, and they cannot get into people's houses, and the dentist can't get in people's faces at this point. So they may actually have received this PPP money and need to pay their team, but they can't work yet. So we were talking to a client yesterday, and I said, hey, look, what was that honey-do list around the shop that you wanted to do? What was that honey-do list around the office that you wanted to do? Now's when you can bring your team members back and pay them with this PPP to do some of the strategic things. Maybe it's recoding. Maybe it's we're actually going through our entire CRM system here next week and just get a couple of people working on that particular portion at this point. So you can bring your people back, but they don't have to do any work to pay them. You also want to, my fourth point here is project. Do a projection about what your gross payroll is going to be for the next 8 weeks. I've already done this myself. I've looked out the next 8 weeks. And I said, okay, based on the salaries, here's how much we have. And can I get bonuses or not? So we'll talk about that in a second. And so if you get toward the end of this 8 weeks and you haven't quite used up the 75% requirement, you can bonus your team for all the hard work they've done. Maybe they were on unemployment for a short period of time and you had them doing some things for your company for home. Maybe they joined you on some of the YouTube videos or Facebook videos you've been sharing with your customer base. Man, write your team a bonus. Keep those people close who have helped you and will continue to help you in the success of the company. Now, you want to add your allowable payroll costs, rent, utilities, and mortgage interest together. You want to add all those things together. Remember though, 75% has to go to payroll costs. Payroll costs includes the benefits, at least how we calculate it. The same guidelines are kind of reversed. I had some questions and they said, hey, Justin, can I pre-fund my rent? let's say I got some extra money based on the calculation. I had actually one client who they had $117,000 a month average last year, but this year it's only at like $80,000 a month. And they have more money than they actually have employees. And he's like, hey, can I go ahead and prepay my rent? Probably not. There's actually a thing that talks about cost incurred. In other words, if your rent said you're paying $1,000 a month, you can't go in and write a $10,000 check. That would be dishonest, in my opinion. Now, is there any guidelines at this point? No. I'm just trying to be as forthright and honest as what we would expect if somebody was, if we were the bank in this position or we were the government in this position. So I think we should be honest here. So there's a cost incurred. Now, that doesn't that could be manipulated a little bit on the retirement benefits. It's not uncommon for clients during the year when they get a big windfall that we'll have them max out their safe harbor amounts. Go ahead and max the safe harbor. If it's a company sponsor, like I have a lot of clients who the company actually makes the contribution in their retirement account, might not be a bad time to lump it in at this particular point. Now, again, there's no guidance at this point. I expect that will come about. So what I'm saying is subject to change, as we've seen over the last 2 weeks. Holy cow, it's been like riding a roller coaster in the dark, friends. It's been amazing. But you can perhaps deal with some of the retirement. We have a lot of clients who use cash balance plans, and there's some special rules underneath the CARE Act that affects cash balance plans, 401ks. We have clients that have SEP IRAs that the company makes contributions for the owners, for several key employees, and for the team members. Now may not be a bad time if you have some extra cash to use in that retirement. Again, guidelines I expect will come out, giving us clarity on that. But as I interpret it right now, again, I'm not a lawyer. I'm just a humble CFP here. We may have some wiggle room there in that. So I'm going to interpret a little bit more liberally. Now, Schedule Cs. I got to tell you, they weren't too friendly here recently on the last guidance they had. So I'm going to tell you need to speak specifically with your advisors if you're a Schedule C. If you file a Schedule C, you're going to have to make some slightly different adjustments there. And then remember, and this is key, I keep wanting to say this, you want to compare your total annualized salary or wages of Q1 of this year to make sure that you did not reduce an employee's pay by greater than 25%. So that's been a question I keep hearing is, Justin, can I hire my team back and pay them a little less? Be careful. You don't want to drop below that 25% guidance on a employee reduction. So I've now given you two 25% numbers. So let me clarify those so you don't get them confused. The first one is that only 25% of the loan amount should be used for rents, utilities, or mortgage interest. Okay, only 25% should be used for that portion. The other 25% number we're dealing with is you make sure you don't reduce your team members' pay by greater than 25% of what the average was prior to this event. So there's two key 25% numbers that are pretty black and white in the rules. And the banks, I have a feeling when they deal with this, are going to be checking for that. But what if you can't spend the money? What if you can't spend it all? Look, remember, this is a 2-year loan at a 1% interest rate. Think about what I just said. It's like a car loan, friends, at a 1% interest rate with a portion of it being forgiven. If you can't spend it all because of the way the calculations worked out and you thought you end up getting a little bit more, there's also a 6-month deferral. There's no collateral involved in this and there's no personal guarantee. Also, don't forget that the forgiveness on this particular forgiveness of this particular loan is not taxable to us. Friends, this is tax-free dollars. I had a listener on the podcast said this is the largest money grab. They actually compared it to the land grab, almost like the old Oklahoma, the claims rush that transpired in our early country's existence. Like, man, this is an unbelievable money grab at this particular point. So if you can't spend it all for whatever reason, remember it's a 2-year loan. That's not the end of the world, okay? At a 1% interest and you don't have to pay payments for 6 months, there's no collateral and there's no personal guarantee. But I have a feeling that with the guidance that the SBA is going to be giving us, even more so as we go forward over this next, roughly 60 to 90 days, that we're going to have a little bit more clarity on how to calculate this. I can tell you that our team is working at this point with our clients and already building Excel spreadsheets because we're nerds, right? We're building Excel spreadsheets. We're working with CPAs. We're working with banks and trying to help make sure that we're maximizing the forgiveness for our clients. So I wanted to leave you some information today. I found this picture here with me in front of a favorite John Deere tractor. If you have any questions, reach out to us. You can connect with me on social media. Perhaps you want to leave a question there after you watch this video, either on Facebook, YouTube, etc., and say, hey, Justin, what about this? Hey, look, I do a Q&A that says Ask Justin. Feel free to leave us a question, and then I'll do a Q&A and answer the questions. We actually just had one of those yesterday. I've already got like 7 questions today that we'll be answering more than likely tomorrow. So feel free to connect with me, and let me just remind you that this, once again, is educational purposes only. I'm going to tell you to speak to your advisors. This is not advice on exactly what you should do. I don't know you. I don't know your particular circumstances. You know, thousands upon thousands of people watch this particular podcast, watch my videos. I mean, thousands. I can't believe the number of people that actually watch videos of me, an old country boy. But I have an idea what we're doing, but I'm not giving you advice here. So friends, I'm going to leave it with that particular point here to say that the PPP has been fun. It's been different, but we're going to continue to try to work through this. I have to often say, you know, I know life is hard, but life is good. And, you know, lending can be frustrating. We're going to continue to try to make your lives at least financially simple. Remember to go out and make it a great